businesses can do for themselves is wrangle and get your arms around a predictive profit metric. So if you can understand on a daily basis how much profit you are driving for your business, and you can make associated ads, marketing, listing based decisions with that metric, I think you're going to find yourself in a favorable place because you essentially have, the greatest metric and indicator of your business's success that you're operating with. And so I think it's easier said than done. But I think that would be my single recommendation to aligning and allocating resources appropriately.
Hello, everyone. My name is Caroline. I am the Director of Marketing here at Trellis, and I am so excited for this panel today. You might have seen me around. I've been in the e-commerce space for a hot minute now, and I just celebrated a year at Trellis, and I'm so excited to be doing my first LinkedIn Live, joined by Tasia, our head of e-commerce growth at Trellis, as well as Anisha, who is Chief Revenue Officer at the Amber Group. So I'm going to add them and we're going to jump right in. Hello, friends. How are you guys doing today?
Hello. Good. Anisha, you're on mute there.
Yeah. I thought it would be a fun start to an event to just stay muted and request some tech support.
I don't think it's a proper event if someone doesn't go on mute unexpectedly. So we got it out of the way early. And we're gonna touch on a lot of fun things today. Fun. I think it's fun. Driving impactful growth on Amazon. It's really easy to just try and aim for numbers, but what are numbers without their equal impact? But before we get into that, while people are still joining us, I am dying to know, do you guys reach for a cup of coffee, a cup of tea, or are you one of those weirdos that goes for water before anything in the morning? Anisha, we'll start with you.
I have a prop to answer this question. I start with a cup of coffee, usually the size of my head. I think that's the most appropriate way to start your day.
For sure, Tasia.
Definitely coffee. Black, none of the milk, sugar, any of that. Honestly, I can't go without it.
No, that's good. I also am a coffee girl. Yeah, I had a doctor once tell me that I had a caffeine dependency, and I was like, doctor's orders, coffee every day. I'm so sorry. But that's good. I love that. Before we get even further into the details, you have both worked with a ton of brands, a ton of products from launch phase to phase out phase. So can you talk about a time that you've maybe misjudged a product's potential? Tasia, you want to take the lead?
Yeah, absolutely. I think one of my favorite examples is in most recent time is a brand that I followed since its inception, right? Poppy. Early on, it was just another health drink with apple cider vinegar, great benefits. But let's be honest, right? It wasn't the sexiest product if you look at their original packaging back then, right? But ever since the Shark Tank appearance, their rebranding and them leaning into lifestyle a bit more, being more vibrant. I like to call it vibe first marketing, and everything changed for them, right? That's changed their entire perceived value for being let's say, a functional wellness drink to something that's fun, a cool soda alternative, right? And their growth started on Amazon, right? They were an Amazon first brand essentially as a result of it, became the category leader. And ever since their branding shift, right, everything's skyrocketed. Their velocity, reviews, subscribe and save, everything. Right. And so Poppy went from a niche to a mainstream product getting acquired by Pepsi. And I think a lot of it is when I first saw it, right, I wrote the product off. I was like, yeah, this product doesn't look too great in terms of their early packaging. Right. And so sometimes all it was is it needs the right packaging, right narrative and exposure. And Amazon's the perfect place to test that.
That's great. Anisha, do you have a similar story?
Yeah, I have a product within our own catalog that I have definitely misjudged. I think when I have I certainly have the capacity to misjudge a product, especially when I'm not the target consumer. And so we have a toe strap brand meant for off-roading enthusiasts. And I really misjudged essentially how intrinsic going to off-roading events and going to kind of these enthusiast events were for the brand presence itself. And so not only did I misjudge essentially what the product required in order to scale the brand, but I misjudged essentially what exactly off-roading enthusiasts were looking for in the context of the product.
That's great. And I think one thing that you both touched on briefly, Anisha talking about putting yourself in the mind of the consumer, Tasia talking about branding and vibe first marketing, it comes back to a lot of emotive touch points and ideas when developing or launching products. However, some of our best advice here at Trellis and in other places in the e-commerce space is to remove emotion from your product decision point, whether you're launching or phasing it out. So, how do you balance the emotion with the metrics and the KPIs and the black and white? Deja?
I think it really comes down to being data backed, right? And as much as you are emotionally attached to certain product lines, at some point you need to be able to know to cut your losses and essentially start to build around your winners, right? Finding products that are doing well for you, both on a profitability and a growth perspective as well, but also finding products that complement each other, bundle well together, and at the end of the day, your customers will tell you what products to prioritize, right? Wherever the demand is, that's where you essentially want to go towards.
Anisha?
Yeah, I feel very similarly to Tasia on this. Tasia and I have talked about this before, but I think in the beginning of a product launch or in the beginning of a brand, essentially everything that you're doing is more or less based on intuition or emotion. So you're doing a series of asymmetrical bets, and you really have to qualify those asymmetrical bets with essentially your own data, which is your emotions. And then I think once you get the data to essentially qualify either the product, the brand, the launch, the platform, then you can start making more informed decisions like, hey, Walmart is not working for us or Amazon is working for us. And these are the reasons why. And this is what we have to do to optimize to, get our product ranked as the number one product within the category or something like that. But I think everything starts with more or less intuition or emotion-based reasoning.
That's good. Now, in the space of e-commerce, as well as general marketing and the broader retail space, we're all familiar with the Pareto principle, 80-20 rule, where 80% of your sales come from 20% of your catalog. In the past, I had also heard it referred to as a head, torso, tail when looking at your catalog as well. So when you are looking at this 80-20 split, how are you choosing to identify what's driving the results? Are you only looking at profitability? Are we looking at advertising sales? Anisha, I'll let you lead with this one.
Yeah, we apply the Pareto principle quite literally to our product portfolio or our catalog. We dedicate a higher number of resources and attention and organizational efforts towards the 20% of products that are driving the largest amount of profit. And so we certainly organize ourselves around that principle. As far as the metrics that go into defining what a product success could look like, we operate on a profit basis. So we do have profit estimates on an ASIN level or on a SKU level that we kind of abide by. A lot of those profit estimates are assumption based, and we've done a lot of work to refine those assumptions so that they match our end of month financials, and we're constantly refining those assumptions. And so I'd say there are many metrics that go into a profit metric, which is why it's a valuable metric for us. There are assumptions regarding ad spend, there are assumptions regarding ad efficiency, there are assumptions regarding supplier costs. And so we have a single metric with many metrics baked into that metric. And we find that metric valuable because ultimately it's the greatest signifier of our business's success.
Deja?
No, and I completely agree with Anisha, right? At the end of the day, especially with the way everything is headed on e-com, tariffs and everything, bottom line is what everybody's protecting, right? That's what your cash flows and everything rely on at the end of the day. And so the 80/20 is still possible, right? A lot of businesses, a small portion of that will drive most of their sales. And I think what's important is how do you quickly identify those product lines? Right, and understand what are those best-selling products, whether it's on a sales perspective, a profitability metric, or on a product line that could arguably be driving a lot of new to brand to your business is, or something that drives repeat purchases to the business, right? And so I think once you identify that 20%, I think it comes down to your ability to build around those winners, right? Because 80/20 can only get you so far. And if your best selling goes out of stock, you're in kind of shambles at that point, right? So how do you diversify your product catalog is a KPI that I like to look at personally, right? Is, are there other mid-tier SKUs or lower selling product lines that I can look towards pushing, right? That could either complement my best sellers, right? Bundle well, can be part of a natural next step in our customers' journeys based on what products they can buy, right? And so by identifying that, building around it, I think that's how you future-proof your product mix.
Tasha, I'm going to throw a question to you that, in all fairness, we didn't prep for. So we're going to go with it. But you spend a lot of time in advertising campaigns and helping clients advertise. And so how do you have any different strategies? Do you look at advertising similar with the 80/20 rule? Or are you putting 80% of resources towards those top 20% of products or ad campaigns?
I think in some scenarios, yes, but there's also times where we're deploying a loss leader strategy, right?
Mhm.
I'm going to spend on a SKU that may not actually drive a lot of sales for me, nor it very profitable for me, but I know that it's the one that has the highest conversion rate, the highest click-through rate, the best pricing that's incentive for customers to come in. And then the bet there is I make it up on all the other variations that I have within that parent listing, right? With the multi-packs or the different colorways, the larger sizes, right? So if you've got a listing structure that's heavily dependent on parent-child, then on a loss leader perspective, right, all the ad spend goes towards that halo product essentially, right? And it may not be your top 20%
Mhm.
product.
That's great. You have both mentioned resources. And of course, everyone has a finite amount of resources, whether it is financial resources, human capital, your time. So, what we talked a little bit about the metrics that you're looking at to determine where a product falls in your 80/20. But how are you ensuring the right resources within your limited bandwidth are going to the right places? Is that tuning back into the intuition, looking at specific metrics? Anisha, we'll start with you.
Yeah, it's a great question. I think one thing that I've realized is that your like human resource strategy has to complement your business strategy. And that
Mhm.
might sound very simple, but really organizing a team around how you're thinking about your product strategy and how you're thinking about essentially how you want to, for us, segment your catalog is very important. So for us, we have dedicated players dedicated to our strongest ASINs. We call those our power ASINs. And then we have a separate team handling the bulk of our catalog or our long tail ASINs. And so organizing the team to focus on different portions of the catalog was quite an effort because we had historically been focused and resourced on a brand level. So individual team members were allocated to various brands. And then
Mhm.
just for exposure and context to everyone here, the Amber Group has a portfolio of over 40 brands, and we have a SKU catalog of over 5,000 SKUs. So we have a tremendous amount of information out there, and trimming our attention and making sure our resources are aligned with our business strategy is one of the biggest challenges for, I think, aggregators in general in this space.
Tasia?
No, I think absolutely right. Even if I just think about how we run our business as well, right, within the dev team, instead of us having resources that can do everything, it's about having teams within that organization that can specialize, right? You have a front end developer, you have one in the back end, You have one who's purely a database guy who just looks at all the data and the number crunching and trying to connect those dots. That way you have the right resources focusing on the right thing and giving it the full attention. And the same thing applies to Amazon sellers as well, right? Especially when you have thousands of SKUs like Amber does, right? Every SKU needs to justify itself in terms of the product mix, right? You have to show your value. It's not just about sales, but it's also, does each of those SKUs contribute to a bigger picture, right? And it's key KPIs, especially, right? And Anisha said this as well, right? Contribution margin at the end of the day is key, right? So which of these product lines is helping your bottom line, right? Where are you spending these efficiently? But also, like, are any of these driving more new to brand, for example, right? Or does it improve your lifetime value as a whole? But if a product isn't doing any of those things and all it's doing is you're just spending money on it, at that point, really, you just have to cut it loose, right? And the emotion needs to go out, and it's all backed by data. And so not every low performing SKU, I would say, is going to work. And so you have to be able to write that off and zoom out and just focus on what works.
So when you're looking at this, we've mentioned high performers, low performers. What is a window of time that people should be looking at? I think in e-commerce, it's easy for people to say, this ad campaign hasn't performed. It's been running for 2 weeks, and make a panicked decision. But when it comes to products, you need more data than that. So what kind of window are you looking at to determine whether a product will be successful or needs to be cut loose? Asia?
Well, I say it all the time, right? We get brands who come with us who think Amazon's going to be an easy place to get started. They launch a product and they're suddenly saying, where are all my sales? It's not as easy. I'm spending a whole lot of money, but I'm not getting anything, right? And I think especially when you're launching a product line, it's a lot of investments, and it's not a 1 month, 2 month play. Honestly, it's a 6 month minimum to even a year play for you to successfully launch a product. Right? There are going to be times, there are going to be those odd ones out where you do really well within a short period of time, but generally the larger broad of the product mix there is going to take that 6 months to a year, right? But you need to have the right strategies in place. You need to make sure that you have your SEO, your pricing, your media spend allocated. All of those things need to be moving together for you to work well in that time horizon, right? But then you take your best selling product lines, right? Those ones, you have enough data there for you to be more effective, right? You can optimize bi-weekly, optimize weekly in some scenarios, right? There are a lot of different tactics and levers that you can change on those, but it just all depends on what life cycle stage your product is in.
Anisha, with Amber Group, you and your methodology behind your 80-20, your resources split, how often are you looking at where a product falls for resource allocation?
It's a great question. The correct answer is not enough. I'd love to be able to look at this on a more consistent basis. The true answer is that we're looking at it probably around like twice a year or once every 6 months, where we're really reevaluating the products that we've designated as our hero products or our key products, or in our internal designation, they're called power ASINs, and really just making sure that our profit expectations match how they actually perform, that we believe that the brand has continued capability to kind of maintain its relative advantage in the marketplace, and that there are no new competitors or there's no additional crowding of the category that we're in. Amazon is a marketplace, and so I think a lot of the levers are very much competitor driven. And so that's something that we constantly evaluate, just whether or not we have, whether or not we have the expected number of competitors in the space at the right price point.
It seems like more and more competitors hit Amazon daily, depending on what products you're looking at. Now, we are all, I say we all, I actually don't know that I would include myself in this, but Trellis Power users here. It is a software that has helped Amber Group. Tasia's in it every day. So excluding Trellis from the mix, we can come back to it. What are some of the softwares and technologies that makes this prioritization and looking at these metrics easier? Anisha, we'll start with you.
Yeah. So we have a kind of a homegrown system of analytics. So we have our own database, which is housed in Snowflake. We have a data visualization tool, which is Looker. And we have some of those like predictive metrics that I mentioned, like profit, baked into our homegrown visualization and database tools. Outside of that, we're looking at Keepa, we're looking at Helium 10, to kind of track competitor behavior. And now we're really leveraging self-service AI and considering constructing our own AI solutions to deliver us some of the insights that previously we were searching for. So previously, when it comes to like sourcing competitor information, getting your own listing information, seeing your own rank, you'd have to look across multiple products. And with the advent of kind of how commonplace AI is, we've really been able to synthesize a lot of that information in one go-to platform. And so that's helped us from an operational standpoint. And it's also helped us kind of get clear-eyed about what data we actually need to make informed decisions, because there's dev resources appended to them. There's a roadmap and a sprint appended to it. So it's been helpful.
That's good. Tasia, you are juggling multiple clients, your calendar. What is keeping you productive and on top of things?
I think there's a lot of tools that I rely on, right? I think there's my Notion calendar, Notion workflows and boards that I use to stay organized. But when it comes to, I think, the Amazon space, right, there's a lot of tools out there. Obviously, I'm biased to the tool that we built here, right? And I think Anisha said something at the tail end there, right? It's understanding what data is important, right? And so everything that we're trying to do is, how do we cut through that noise? And at the end of the day, how do we make sure that brands aren't overwhelmed, right? Because there's a lot of data, right? I can go to the ads console, I can go to Seller Central, I could go to Helium 10 for keywords, Jungle Scout, Data Dive. There's all of these tools out there that all give you information. But the value comes down to, how do you connect those dots and how do you understand which of those data points is actually important for your business, right? Because I don't need 10 different dashboards saying 10 different things. All I really want is, at the end of the day, clarity on where to act, right? Is it a pricing issue for me? Did my rank drop? Is it an inventory? Where am I spending my ad dollars ineffectively, right? And so there have been times where I've seen scenarios where brands go in and they say, shoot, my performance is down, impressions are down, let me go increase bids here. But what they really find out is they're just low on stock, right? And the real issue was an inventory issue, but they end up making the wrong fix, right? So I think it comes down to, as a result of it, if you don't know what you're doing with the data, all you're doing is firefighting, right? So how do you centralize that, have a dashboard where it's really just the KPIs that matter to your business, because that what allows you to be proactive. It's going to make you make your decision processes a whole lot quicker, and just focus on what really matters.
That's good. And it's also, you mentioned firefight. It's an interesting analogy because people often, with all of the data available, they say you're drinking from a fire hose. And that's sometimes what it is, especially as people add more and more tools to their toolkit, to their toolbox, in an effort to sell better. I think you had said it, it's analysis paralysis, where there are so many different numbers that you don't know where to go. This number's up, but this number's down. But do those numbers even matter to each other? So keeping an eye on those is really good. And now, since I did take Trellis out of the mix from that conversation, when you're logging in, you're spending time in the app daily, weekly, what have you, where do you land first? What is your go-to to say, I'm being successful? Tasia, we'll start with you.
I think it, for me, is when I go in, I look at different brands, it's understanding what is that KPI that matters to that brand, right? And generally, it's going to be the margin, profitability, and then tacos is a big metric everybody cares for. Obviously, ROAS is another metric. But more than that, what I like to look for and what we like to show is, what does that trend look like, whether it's over a rolling window or a year-over-year analysis, right? At the end of the day, that's what matters to me, is in the last little bit, am I growing? And year over year, how is my business doing? And then also categorically seeing, had the benchmarks changed, right? In terms of whether I look at the SQPR report data sets or I look at my internal category reports, right? Am I still the leader or am I losing market share? And is everybody else losing market share as a whole? Right? What is that mix overall? And that's going to define how I go about debugging within the app, right? Whether I'm going and saying, okay, I need to focus on my ads, right? I need to scale up my ads. Or it turns out my biggest competitor cut down price by 50%, and that's what's really impacting my business. So the question then is, do I want to react to that short term, or do I just let it happen and then make sure and I protect my margins instead of just going after everybody else, right? So it all depends on the brand and what they're looking to optimize for.
The famous Amazon answer of it depends. Anisha, what about you? Do you go for the agency dashboard, the advertising dashboard?
Yeah, I think the agency dashboard is really helpful for us just because we have so many brands. And so I think one of the hardest things for us historically has been getting all of our brand data synthesized in one place and being able to see with an eagle eye view how each brand is performing, and then subsequently how, our major product lines are performing within our brands. I think we're a little bit different in the sense that we're not really treating our brands as brands. We treat our brands as containers for baskets of inventory. And so really we've struggled, candidly before Trellis with essentially getting this eagle eye view. And so the platform has been really helpful in just that simple ability to essentially get streamlined ads and insights, streamlined data across kind of our entire portfolio.
That's great. Now, this is going to be an all call for any last questions, comments to drop them in. We have one more prepared question for our panelists, but if there's anything that has come up while Tasia and Anisha have been talking through this, please drop it in the comments. We have time for a few. But while that is coming in, Anisha, will let you lead with this one. What is one key piece of advice that you would give people who want to take this step in similar prioritization that we've talked about today?
It's a really great question. So I think one of the best things businesses can do for themselves is wrangle and get your arms around a predictive profit metric. So if you can understand on a daily basis how much profit you are driving for your business, and you can make associated ads, marketing, listing-based decisions with that metric, I think you're going to find yourself in a favorable place because you essentially have, the greatest metric and indicator of your business's success that you're operating with. And so I think it's easier said than done. But I think that would be my single recommendation to aligning and allocating resources appropriately.
Tasia, your piece of advice?
I think in it's profitability is the key metric there, but I think from that point on, where I would is stop obsessing over all your low performing product lines. Right? What I find is a lot of brands will tend to spend too much time and a lot of money trying to fix products that they think are going to do really well. Right? That they think that has great reviews, good content, but at the end of the day, it just doesn't perform, and they aren't really built for scale. Right? So instead, really, in my opinion, just automate your bottom 10%. Don't spend a whole lot of money, cap your bids, streamline it, let it be an autopilot, but really just double down on the winners. Right? And product prioritization isn't about going to be how do I save every SKU? It's about what can I do with the ones that are actually going to carry my growth and focus where it counts, right? And by doing that, your results will follow, right? Your profitability will be there, your sales metrics will be there, and all the other KPIs that you look at will start to fall in line as a result.
Well, that's great. And that's all that we had today. I didn't see any questions come in. I want to thank you both so much for being here. I learned from both of you, of course, and I hope this was valuable to everyone else. If you have any questions, you know where to find us. GoTrellis.com, find us on LinkedIn, and we're happy to help, and happy selling.